Hello, everyone. Good morning and good afternoon to all of you joining us today for a masterclass, Achieving Digital World-Class Performance in AR with AI. And we have with us John Salick. He's our strategic advisor at Emagia. And John, over to you to get us across with our masterclass for today. Thank you.
All right. Thank you, Akshay, and welcome, everyone. Our program today is going to address issues, developments that you've probably heard and read a lot about. But we're going to try to put together the concept of AI and exactly what it can do in the order-to-cash, accounts receivable arena, and explain that in a little more depth and illustrate to you its potential. So we'll have an introduction, define some terms, and then we'll define world-class performance in AR. What is world-class performance? Well, one of the great benchmarking companies in existence is the Hackett Group, and we'll rely on Hackett's world-class performance benchmarks. All right, so we'll learn what world-class performance is, what capabilities are required to achieve that. We'll go through those, share with you actually two case studies today, talk about the benefits, wrap it up with a conclusion, and then take any questions that you may have. So let's start off. Hackett Group, just late last year, released a study in which they defined the performance of what they call digital world-class companies. And I think the name kind of implies what type of companies to which they're referring. But interesting, they looked at these digital world-class companies, and they looked at all the finance functions that they perform, not just order to cash and receivables management, but all of them, payables, record to report, that sort of thing. And the conclusion they reached is that digital world-class companies are 34% more efficient, a whole third, commit 40% fewer errors, and we know the rework penalty that errors extract, as well as the impact on customers. And what's really interesting is their staffs allot 75% of their time to analytics, problem solving, opportunity identification and quantification versus just processing. Key punch, processing, getting things done, stuff like that, which really enriches a job. And in the era of the Great Resignation, I would say that your attrition rate would be much lower when your staff spends 75% of their time on analytics and problem solving versus if they spend 25% of their time on those types of activities. So some real advantages there from being digital world class. And clearly, no one attribute can deliver this digital world class status. As always, and what you've been hearing from the beginning of your career, it's process, people. I always add metrics in there. Those are always required. But it appears digital technology is the primary attribute that differentiates the average performers and the world-class performers. So with that background, let's look at some of Hackett's world-class performance benchmarks for AR management. First one, the credit vetting decision. Credit application comes in, information is gathered, a credit decision is made. World-class performance, according to Hackett, is 2 days, and that's elapsed time, not work time, 2 days. Well, that's pretty quick. What's nice about that is if the applicant is creditworthy, you approve it, get them up and running, and start supplying them very, very quickly, which preempts the competition, maybe relegates you as the primary supplier and the competition as a secondary or tertiary supplier. So that's a key one. Average days delinquent, a measure of collections. This is DSO, actual DSO versus what I would call best possible DSO or terms weighted DSO. So just to be clear here, let's say you sell all of your sales on net 30-day terms. Well, your best possible DSO is 30 days. And to be world-class, according to Hackett's benchmark, your DSO would have to be 34 days or lower. It's pretty good. Just pretty good. So, again, a demanding hurdle to achieve world-class performance. Cash App Auto Cash hit rate. Now, Hackett's world-class threshold here is 75%. And, you know, kind of my first reaction, and your first reaction might be, well, gee, that's not so high. You know, I've seen better than that. But remember, Hackett is looking, in their sample is a large portion of global companies. And when you're operating with a large number of different currencies, different banking systems, different languages, you know, 75% is not so bad. We, meaning Emagia, have clients that hit over 90%. Those tend to be US-centric operations. But hey, 75%, still pretty good. Next one is kind of a favorite of mine, deduction resolution time. Customer makes a short payment. How long does it take you to resolve it? Well, to be a world-class performer, it's got to be 7 days or fewer, which again is pretty quick, considering other parts of the organization will probably have to get involved in the research and resolution. And the beauty of this is, if the deduction is deemed to be an invalid one, you want to bounce it back to the customer and collect it. Well, here speed is essential. You know, if you chase a customer about an invalid deduction that's 2, 3, 4, 6 months old, your chances of collecting are pretty low. But if you get right back to them while it's still fresh, you enhance your chances of recovery. And then this last benchmark is really mind-blowing, the cost. I mean, look at this. This is 0.04%, which, if I remember my decimals, that's 0.0004. Very low, very low. And that's where the world-class performance comes in. And that reflects one of the key benefits, lower cost. So those are the benchmarks. Keep those in mind as we go forward here. I took a couple minutes on it because it's important. I want to make sure we understood the definition. So what are the capabilities required? Well, first of all, there's a foundation, right? You got to have a strong foundation. And what are those elements of the foundation? Well, good policy or policies, you know, documented, people understand them. With clear exception protocols, because there's always exceptions. And people need to kind of make decisions on exceptions pretty quickly. So if there's guidelines, then that's a good policy. Another important element of policies are what I call work reduction policies. You know, good examples of this, I'll cite one, called a contractual allowance for shortages and damages. Let's say you have a client that over the course of the year takes 6,000 deductions for short ship or damaged goods arriving. And a lot of them are relatively smaller dollars. And you sum them all up, and you find that the total of all the shortage and damage deductions is 0.4% of total sales to that customer. So what you do is you go to that customer and say, hey, here's our data. We'll be willing to offer you 0.4% discount off every invoice. And in return, you don't take any of these annoying shortage and damage deductions. And a lot of times the customer will agree, and boom, you've just eliminated 6,000 transactions that your staff needs to work through. So those are the types of work reduction policies. So policies is an important process, always, right? Best practice processes, adapted to the individual business. Metrics, the right ones, fewer metrics rather than more metrics. Analytics, always important, gives you insight into causes of problems and opportunities for improvements. And then good governance of a process. These elements provide the foundation for success. But they're a requisite, but they alone will not put you into that world-class circle of performers. So what's required to kind of push you over the top, get you in the winner's circle? Well, one term, kind of a broader term, is hyper-automation. You know, the name kind of suggests what it is. And it is, I call it the confluence of technologies that you may have heard of: intelligent document processing, robotic process automation, and artificial intelligence-powered digital assistants. You know, when you look at a totally manual process, these technologies can automate 70 to 90% of the operations. It's pretty good. And that's where your organization gets pushed up into the world-class category. So it's not only productivity and efficiency, it also improves accuracy and speed of response to the customer. So, good deal. Here's a diagram. I tried to keep it simple. The boxes are simple. Don't worry too much about the content of the boxes. Maybe a little hard to read and all, but you know, on the far left, we start with the inflow of information, data, documents, both hard copy and digital form. And it comes from many, many sources in almost an infinite variety of formats. But they contain the data you need to process your financial transactions in the accounts receivable order to cash process. And it may be data you need to extract from your customer's vendor portal or your own customer care EIPP portal. Maybe Excel files that are sent to you, PDF files, emails, faxes, hard copy documents. Banks send all sorts of lockbox data, lockbox files, transmissions, EDI transmissions, all sorts of documents. And again, wide variety of data, good portion of which you need, some you don't, and then a plethora of different formats. And the hyper automation starts with intelligent document processing, or IDP. Basically, the first step that a human being would take with all these documents is look at it and figure out, one, what information do I need? Two, where is it? And then three, key punching. I mean, that's the old way, totally manual. And what IDP does is it does this automatically. It extracts the data that's required, and only the data that's required. And it converts it and posts it in a file for further processing. So it takes unstructured data and converts it, populates a file with structured data, which tees it up, prepares it for the next stage of automated process. Great. What's the next stage? Well, it could be RPA. RPA's been around a while, very useful, can be very efficient, works with tasks that are high volume, very little variation. I always like to say it emulates human interaction with your ERP. The data's input. There may be some other operations that need to be done to process it, set up a vendor invoice for payment, that sort of thing. And it works well with the simple, repetitive, high-volume operations. And each robot has to be programmed and set up and tested and all. But again, a nice tool. Then the third part here is what I would call the most highly evolved tool. Utilizes a high degree of artificial intelligence, generally embodied in what we call a digital assistant. And the digital assistant really emulates a human being. And it can retrieve information. It can perform multi-step operations. It can react to responses. And the applications are many. I've listed a few here. Retrieve credit information. Go to Dun & Bradstreet. Go to Experian. Get the credit report on the company you're investigating. Calculate a credit score. Recommend a credit limit. It can actually send interactive dialogue through email with your customers to perform collections. Of course, there's a big help with auto cash and can identify the reason code of a deduction and route it properly to the resolver, designated resolver. So, that's the whole landscape, if you will. All these technologies play a role, but as I mentioned earlier, the highest evolved, most effective one is the artificial intelligence. Let's just quickly look at how these technologies, how AI impacts a few of the key order-to-cash process. Credit risk management, I alluded to this earlier. You design your credit app, and an AI-powered digital assistant will go to your credit bureau, go to the banks, get the information you need, validate the potential customer's state of incorporation. Is it a corporation? Is it an LLC? All that stuff that needs to be checked out to do a proper credit evaluation. And then you can program it according to your parameters to a credit score. Right. And then you can go a step further and taking its requested monthly requirements for sales. Hey, I'm going to buy $50,000 a month of product from you. With this credit score, can recommend a credit limit, which goes to the credit manager, credit analyst, who then sets the credit limit. So when you think of credit apps, most of the elapsed time and a good part of the work is just chasing around getting all the inputs. Once you got them, making a credit decision, setting a credit limit is relatively easy. And AI can do this work and really set the table for the credit manager. And then, of course, once the recommended credit limit is formulated, it can route it to the approval authorities based on your delegation of authority. So, there's a big help right here in credit management. What else? Let's look at collections. And this is where it gets very interesting. We all remember, well, some of us remember done letters. We all remember done emails, right? Hey, our records show you owe these 3 invoices that are past due. Please pay promptly. Well, with AI, those can be made interactive. So AI selects the accounts, which is generally where you would use it, is your small and medium-sized accounts that have, some significant past due, and you're not going to have time to actually craft a personal email or make a phone call. Every credit department has those accounts that you just never get to. Well, AI can plug the gap. So it sends out this email and then it responds. So, hey, our records show there's $17,000 over 10 days past due. Can you pay it today? Customer, I'm like, no. Yeah, helpful answer. But the AI digital assistant will come back, okay, can you pay it tomorrow? Answer comes back. Digital assistant, not done yet. Can you pay it by the end of the week? Can you pay it next week? Certain percentage of customers are going to say, yeah, we'll do it. And then it'll say, the digital assistant will say, well, exactly on which date can we expect that? The customer says, okay, April 20th. And then the digital assistant sets up a promise to pay in your collection system. And when April 20 comes, they check to see if the payment came in. So, you talk about portfolio coverage. This is a great tool for doing that. And will ultimately drive down your past due, your DSO. And more importantly, addresses those smaller amounts and smaller accounts, which always have the potential to drift for 90 days past due. And then you start risking that you'll never get paid. What else? Cash App. It just takes auto cash to the next level, really. The IDP takes care of the data extraction and input. AI enhances the auto cash engine. What's nice is it can create the deductions and can also automatically execute the application of credits to debits, things like that. And that leads us to the next one, deduction resolution. Deduction comes in. The first thing you really need to know is, why was this deduction taken? What's the reason code? Once you find that out, depending on the reason code, you route it to different parts in your company or different specialists to research and resolve it. So, for example, if the customer says, oh, you charge a sales tax, we're exempt. Well, route that to the tax department. They'll say, yes, you are exempt, or no, you're not. Or we charge you 6%. We should have charged you 5%. So, but you get the resolution. And again, the full featured workflow with internal dunning, matching of debits and credits. And of course, most of these AI capabilities have great analytics capabilities, which get you into root cause and prevention and things like that. So, just give you a couple examples here. American Heart Association actually sells a lot of gear, CPR equipment, classes, that sort of thing. And they'd sell it on credit, and their manual credit investigation process was resulting in a 2-week backlog. It took 2 weeks. So they implemented these hyper-automation tools, particularly the artificial intelligence functions, integrated with Experian, that was their credit bureau. And the approval process went from 2 weeks to 1 to 2 days, which is within the Hackett world-class performance. And now they're processing 200 to 300 credit apps a month, which is a big volume. The other one is a global medical product supplier. Again, 30 countries, multiple languages, multiple currencies, multiple banking systems, a high degree of complexity. And they implemented the AI digital assistants for deductions, cash app collections. And it just helped kind of across the board. The main thing was the deduction resolution cycle time down to 5 days, which the Hackett benchmark is 7. So they're a world-class performer there. Auto cash hit rate, they pushed up from 50 to 80%, which again, the Hackett threshold is 75%. And particularly with the collections contact, able to push the DSO down 7%. So what are the benefits? First one that I mentioned here is enhanced effectiveness. Get into the world-class performance circle. Cost savings that come with it, primarily productivity, staff cost, but ultimately you'll reduce your bad debt expense and the funding of AR. Improve customer experience, faster response, fewer errors, and overall increase in cash from your AR asset. You get higher cash flow, better, lower costs, better customer experience. All that's going to contribute to increased market share, increased revenue, increased profit. So, what do we take away from today's master class? Well, first of all, world-class performance in AR is an important competitive advantage. You'll have a better, more stable cash flow than your competition. You'll have a lower cost base than your competition. These are big advantages over the long term. And as we acknowledge, there's some foundational capabilities that are required as well: policy, process, governance. However, based on my interpretation of Hackett and my own personal opinion, I don't think you can get into the winner's circle here without today's AI-driven hyper-automation, particularly to meet that cost threshold to be a world-class performer. That's very low, and you can't do it without automation. So a lot of benefits here, a lot of good reasons to implement AI in parts of your organization. And actually, it's a lot cheaper and a lot faster than you might think with a typical IT implementation. All right. Your questions.
Thank you, John. First question is, how does AI fit into hyperautomation?
Well, it's infused in all elements there. The IDP, not so much so with the robotics, but certainly the digital assistants run on AI. And the AI enables those digital assistants to perform more complex operations, like interacting with customers on collections, finding out the reason code of the deduction, and then routing it to the proper person.
Right. Thank you. And let's go with our next question. I know we are already on top of the hour. What is the magnitude of labor savings delivered by AI automation?
Well, if you look at a totally manual operation, which is becoming a thing of the past. But if you look at an operation that's totally manual and you deploy these technologies, particularly AI, you can automate 70 to 90% of that work. And that's what the companies that are in the Hackett World-Class Performance for Cost are doing, have done.
Right. One last question to go with. We see that the Hackett benchmark for credit vetting is 2 days of elapsed time. Is this realistic?
Yes, it is. And initially, I thought, well, gee, that might be a little too optimistic, but we have a client that's reached that performance level on a high volume of credit apps. So, yes, it is realistic.
Thank you, John. That was a wonderful presentation. Again, a great masterclass session today. I would also like to thank all the participants for joining us today. And in case if you do have any questions, do write to us at info@emagia.com. I would also like to take the opportunity to invite you all to our next masterclass on Thursday, the 28th of April at 8 a.m. Pacific time. The topic for our next masterclass is how to achieve world-class performance with AI automation. Looking forward to all of you joining us again on 28th of April.
All right. Thank you, everyone. See you in 2 weeks.
Thanks a lot. You take care.